The numbers were certainly bad. I mean, they were worse than expected. CPI, I think a 41-year high. Even PPI this morning was worse than expected. But if you look at the last 30 days, all the inflation assets, they've sold off like between 20 and 30%. So crude sold off, lumber, copper, raw commodities like wheat and corn, they're all sold off. So what that sort of tells you is that the market thinks that we're passing peak inflation. So the risk now is not necessarily inflation, but it's more of recession. That's the risk. And the Fed is hiking into a recession scenario. So the Fed fund futures have, I think, a 30% probability that we hike by about 100 basis points in July. We may not get there. It'll be probably 75 bips, but nevertheless, that's what the market is telling you. So the recession risk is high, and if you even look at the 10 to 2-year curve, the Treasury curve, it's at minus 22 bips right now. It's inverted and has been for the last week. Now, why hasn't crypto sold off more aggressively? I think the positioning in the market is pretty extreme. It's extreme bearishness at the moment in both in all risk assets, including crypto. So when the narrative shifts from just peak inflation and more of a hawkish Fed, which is already kind of priced into the market, you see sort of a short covering scenario. And this is exactly what you saw in crypto. This is exactly what you saw in TradFi markets yesterday when they bounced off the lows. I'm a seller into any rallies. I don't think it's sustainable. The only way the rally across asset classes, across all risk assets, is sustainable is if you see the Fed blink. And that's not going to happen for a while. You need to see a deceleration of headline inflation. You need to see, or us entering a recessionary phase for that to happen.